in the East African financial markets, as well as global events affecting the performance of these markets. Now, today we're starting a new week, and as we know, the markets are already open and trading is already taking place, but we want to look at how these equities fared last week, and also to understand where we will be headed in the world of financial markets as this week goes by. Usually we talk about the East African financial markets, and it is basically the Uganda Securities Exchange as well as the Nairobi Securities Exchange. And Nairobi actually has a reputation of having very many cross-listed entities, some coming in from Johannesburg, and it is actually very big compared to the Uganda Securities Exchange. But we also have equities that are cross-listed from the Uganda Securities Exchange onto the Nairobi Securities Exchange. So we're to see how those ones are also responding to the current market conditions. But as usual, we want to start with the analysis from the Uganda Securities Exchange. And according to the previous trading session, we're looking at a total of 28,600 shares. Now, this was corresponding to a market value of about 5,627,000 Ugandan shillings within that particular trading session. Now, comparing this data with the previous trading sessions, we're looking at a 653% improvement in volume, as well as a 771% improvement in turnover. And all of this is leaving us with a market capitalization of 19.8 trillion Ugandan shillings. So in aggregate, we're looking at 3 listed equities that participated in the trading, and we ended with about 5 gainers as well as 3 losers. KCB Group led the gainers with 0.77%. Share price appreciation closing at about 911.69 Ugandan shillings per share. It was followed by Equity Bank, that also went up by 0.38%. Jubilee Holdings also moved up by 0.14%, and Kenya Airways also spiked by 0.14%. On the losing side, we're looking at Nation Media Group coming out last with an end-of-day price depreciation of 1.04%. Now, they closed at about 481.73 Ugandan shillings per share, and they were followed by East African breweries that also went down by 0.56, and Setam Investments has also begun the week within the losers, closing with a price depreciation of 0.32%. Now, East African breweries has been in quite a movement throughout the whole of last week, and we saw it in the gainers at least twice, and it has been in the losers until the close of the previous week. Now, looking at East African breweries, it is actually a public limited liability company incorporated under the laws of the Republic of Kenya. Now, this highlights the fact that it is actually a cross-listed equity, and it was founded in 1922. So East African Breweries Limited is a group holding company for the largest brewing concern in East Africa, with an annual turnover of about $325 million US. So East African Breweries owns about 100 shares in Kenya Breweries and Central Glass, as well as Kenya Maltings. And in Uganda, it owns 93% of Uganda Breweries Limited, and in Tanzania, it owns 86% of Kibo Breweries. So East African Breweries Limited is listed on the Uganda Securities Exchange under the ticker symbol EABL, and has been listed since 27th March of 2001. More information on their international securities identification number can be found on the Uganda Securities Exchange website for more information. In terms of figures, we're looking at shares outstanding 791 million and a market capitalization of 3.21 trillion Ugandan shillings. But looking into East African Breweries' previous performance, we're seeing it coming down all the way from March of this very year. It spiked up a bit in May, and it didn't start July well, but hopefully as the month goes on, we shall see some noteworthy movements from East African breweries. But it is also one of the highly priced securities on the Uganda Securities Exchange, and it also explains their large market capitalization. So hopefully many of you will be looking into it, to see if it might be a worthy investment. But looking into other losers, we saw Nation Media Group, which is also across listed equity, and Centum Investments, that is also across listed equity. So we're noticing that all the losers across listed equities, and we can immediately connect this performance with the current financial environment in Nairobi. So hopefully by the time that situation stabilizes, these equities will have been able to pick up their share prices and merge within the top gainers. So, but also let's notice that KCB Group, that at 55.50, Stanbic Bank is at 37.05, Uganda Clays Limited is at 12 Ugandan shillings, and Umeme with 6,000 recorded trading volume stands at 460 Ugandan shillings per share. Now, to look into the trading summary for the Nairobi Securities Exchange, because we'd also want to compare this analysis and see how the cross-listed equities are performing on the other side, and also to see if local companies on their market manage to show any kind of movement. But as of yesterday, by the close of as of Friday, by the close of that trading session, we ended with a total of 4,706,200 shares in about 840 deals. Now, this was corresponding to a market value of 97,105,967 Kenyan shillings, and that was what was traded. But comparing all this with the previous trading session, the data is actually showing a 69% decline in volume and a 67% decline in turnover. But we're seeing the deals also coming down by a 9%, and all this is leading to a market capitalization of 1.71 trillion Kenyan shillings. But in aggregate, we closed with 46 Nairobi Securities Exchange listed equities participating in the trading, ending with 18 gainers and 19 losers. Longhorn Publishers led the gainers with a 7.83% share price appreciation, closing at 2.34 Kenyan shillings per share. And looking into Longhorn, Longhorn is actually a Kenyan-based public limited liability publishing company, and the company sells educational and general books for all educational levels, including preschool, primary, early childhood education, secondary and tertiary institutions. Longhorn was incorporated in 1965 and was formerly known as Longhorn Kenya Limited until November of 2014. It was listed on the Nairobi Securities Exchange in May of 2012, and the company has operations in Uganda, Tanzania, as well as Rwanda. So its main business is in the development, publication, marketing, and distribution of educational and general books. The Longhorn is actually listed on the Nairobi Securities Exchange under the ticker symbol LKL, and more information on their international securities identification number can be found on the Nairobi Securities Exchange website for more information. But in terms of numbers, we're looking at 272 million shares outstanding and a market capitalization of 638 million Kenyan shillings. Now, as far as the previous trading session is concerned, we're looking at Longhorn closing at 2.30 Kenyan shillings per share, and we're recording a 7.8% gain over the previous closing price of 2.17 Kenyan shillings. So Longhorn Publishers began the year with a share price of 2.41 Kenyan shillings, but has since lost 2.9% of that very price valuation. This is ranking it the 38th on the Nairobi Securities Exchange in terms of year-to-date performance. Now, let's also not skip the fact that it is the 36th most traded stock on the Nairobi Securities Exchange and has been so over the past 3 months, and has traded about a volume of 360,000 shares in 117 deals. This is valued at about 819,555 Kenyan shillings per share over that very period. Now, we're looking at an average of 5,714 traded shares per session, and a volume high of 154,200 that was achieved on May 20th of the same period. We are waiting to see if Longhorn will be able to maintain its position as this week goes by. But looking into other top gainers, we are looking at Total Kenya that went up by 7.5%. Car and General Kenya also went up by 7.32%, and Scan Group went up by 5.26%. On the losing side, Samir Africa came out last with an end-of-day price depreciation of 8.64%, closing at about 2.01 Kenyan shillings per share. But just for context, Samir is also another Kenyan-based company that is principally engaged in the manufacture, importation and sale of tires and letting of premises. So the company's product range includes passenger textile and steel belted radials. We're looking at 4x4 tires, light truck radio and bias, truck and bus, agricultural and industrial and off-road tires under the brand name Yana, and the company produces both tube type and tubeless tires, also looking at tubes and flaps. So the company's subsidiaries include Samir Africa, that is also in Uganda, and there's Samir Africa in Tanzania, as well as Yana Tire Center Limited, and also Samir Industrial Park Limited and Takwa Trading Limited. It is traded under the ticker symbol SMER on the Nairobi Securities Exchange, and more information on their international securities identification number can be found on the Nairobi Securities Exchange website. They boast shares outstanding of 278 million, and we're looking at a market capitalization of 559 million Kenyan shillings. So the current share price of Samir Africa is 2.15 Kenyan shillings per share, and we're looking at an 8.6% drop from the previous closing price of 2.20 Kenyan shillings per share. Samir began the year with a share price of 2.27 Kenyan shillings per share, and we're looking at it losing about 11.5% off of that very price valuation. This is ranking it the 48th on the Nairobi Securities Exchange in terms of year-to-date performance. Now, shareholders' worries are actually compounded by the fact that SMER or Samir Limited has lost about 12% of the stock's value since June 6th to date. And Samir Africa is the 33rd most traded stock on the Nairobi Securities Exchange and has been so over the past 3 months. We're looking at it having traded a total volume of 788,300 shares in about 365 deals valued at 1.67 million Kenyan shillings over the period. This comes with an average of 12,513 traded shares per session, a volume high of 86,200, and looking at this number, we're dating it all the way back to May 28th of the very same period. Hopefully, a deeper analysis on through the company's latest financial reports will give you a clear understanding of what brought this massive drop to Samir's listing on the Nairobi Securities Exchange. But looking on to other losers, we came BK Group also came right after Samir with a 7.46% drop in share price. Trans Century also went down by 7.14%. Britam Holdings, which is also a cross-listed equity, went down by 6.27%. And Safaricom came out as the highest recorded traded stock with 2.17 million traded shares. It was followed by Equity Group that also recorded 731,300. Kengen also recorded 500,400, and KCB Group recording 443,400 in terms of traded volume. But looking into other cross-listed equities on this exchange, we want to understand how they are faring up in terms of performance. But looking at East African Breweries, it is at 143.25 Kenyan shillings and didn't record any trading volume as of yesterday. Jubilee Holdings also stands at 168 Kenyan shillings and didn't record any trading volume as of yesterday. Kenya Airways is at 3.83. It didn't record any trading volume as of yesterday. We're seeing NCBA coming down by 0.1, leaving its share price at 41 Kenyan shillings per share. Actually, Nation Media Group, on the other hand, came up by 0.15, closing at 18.30 Kenyan shillings per share. They had a trading volume of 1,800. Looking at Stanbic Holdings, it went up by 1.5, leaving its share price at 114.5 Kenyan shillings. We had a trading volume of 8,500 shares within the last trading session. Safaricom is showing 84,500 in terms of activity, closing at a share price of 17.5 with a price increase of 0.2. Sanlam also went up by 0.02, closing at 5.68 Kenyan shillings per share with a volume of 500. Umeme is at 14.50 Kenyan shillings per share and didn't record any change, but we're seeing a 600 in terms of trading volume. Now, focusing onto the market indices and going back to the Uganda Securities Exchange, we want to see how the indices are faring up in terms of the performance. But the all-share index soared by 35.71, leaving a 3.5% points to close at 1,055.37. Now, all of this is representing a 1-week gain of 2.57%, a 4-week close of 1.43%, but an overall year-to-date gain of 20.96%. The local company index increased by 2.08% to reach 264.51 points. This is making it a 1-week gain of 2.08%, a 4-week gain of 0.59%, as well as a year-to-date loss of 2.7. Now, looking on to this other hand of the Nairobi Securities Exchange, they have a lot more indices than the Uganda Securities Exchange, but looking on to their all-share index, we're looking at it climb by 0.34, which is about a 0.31% points to close at about 109.02. This is representing a 1-week loss of 0.43%, a 4-week loss of 4.88%, but an overall year-to-date gain of 18.36%. Other remarkable indices that performed were the NSE 10 share index that went up by 0.72, and leaving a 1-week loss of 0.24%, but an overall year-to-date gain of 22.83%. The 20 share index went down by 0.42%, but leaving a 1-week loss, a 1-week gain of 0.19%, as well as a year-to-date gain of 10.56%. The 25 share index went up by 0.53% and leaving a 1-week loss of 0.22%, as well as a year-to-date gain of 19.94%. Now, that has been the detailed analysis of your regional markets, and hopefully we're yet to see a lot more going on in today's trading session. And as the week goes by, we have more within the news to help you make a more detailed analysis on the performance of these equities, and for you to understand how the economic environment is directly or indirectly affecting the performance of these equities. We'll be right back after a short break.
Smart 24, driving business.
Crazy guy. I'm going to go crazy. Flavors of Africa.
Enjoy your favorite shows anywhere. Download DSTV Stream today.
Are you a female business owner in Uganda looking to grow and transform your business? Grow empowers you with access to entrepreneur services, accelerating your business growth from micro to small and from small to medium enterprises. Grow provides comprehensive support, including training, startup tools, business formalization, certification, networking opportunities, access to affordable credit and grants, coaching, and mentorship, with all resources available for free. For more information, please visit grow.go.ug. Contact the PSFU Grow officers at Trust Towers, ground floor, plot 4 Chadondo Road, Nakasero, or the Ministry of Gender at plot 2 George Street, Simba Manyo House, 3rd floor. Call us at +256 394 514 071. This message is brought to you by the Grow Project, a Government of Uganda project implemented by the Ministry of Gender, Labour and Social Development and PSFU, funded by the World Bank. Grow, generating growth opportunities and productivity for women enterprises.
You used to tell me that I don't make you happy. All that time you would be complaining. I'll call you every day, yeah yo, baby don't know.
can now get all the chibuzi out with MTN voice bundles. Call all networks Kubei Dondoro. Buy a 25-minute voice bundle for only 1,000 or buy any daily voice bundle of your choice. Dial *100 *21 hash and select daily or use the My MTN app. When we talk together, we are unstoppable.
The tech giant Apple has unveiled a mixed reality headset called Vision Pro, its first entirely new product in 8 years. The US tech giant claims the device is the most advanced personal electronic device ever. Reassembling a pair of sky goggles, it features a glass 23 million pixel screen which covers the upper face and is controlled using the wearer's eyes, hands and voice. Vision Pro is labeled as mixed reality as it combines virtual reality, in which the wearer is fully immersed in the digital world, with augmented reality where digital images are overlaid onto the real world. The device, which is the first new product since the Apple Watch was launched in 2015, blends a video feed from the outside world with a virtual world displayed on screens inside the headset. Now, it is set to rival Meta's Quest Pro from last year and Quest 3, which was announced last week. Today marks the beginning of a new era for computing, said Apple's CEO Tim Cook as he launched the new device at the company's annual software developer conference on Monday.
Smart 24, driving business.
News. Welcome back from that short break, and we are coming back with insights within financial news, regional financial news that is affecting the performance of these markets. But looking at our major headlines coming in from the East African financial environment, we're looking at Ugandan sugarcane farmers bitter as regional markets shrink on glut due to low prices. So as Ugandan consumers celebrate the lowest retail prices of sugar in 5 years, the industry is in a state of turmoil, and outgrowers are protesting falling prices of cane amid glut millers blame on rapidly shrinking regional markets, which has resulted in domestic stocks rising to unprecedented levels. So this week, growers in the eastern district of Buikwe resolved to halt supplies of sugarcane to Lugazi-based Sugar Corporation of Uganda in protest against the fall of the price of cane from about 250,000 Ugandan shillings per ton just over a year ago to 140,000 Ugandan shillings, which is today. The millers actually say they are hamstrung and warn of further declines unless clogged regional markets open up to Uganda. So it's a misconception for anyone to believe that cane prices are simply a reflection of the supply of cane. They're actually more of a reflection of the challenges in the market for refined sugar. And that was according to the spokesman for Industry Lobby Uganda Sugar Technologists Association, Mr. Wilbur Mubiru. So whenever they face challenges in the market for refined sugar, it is actually transmitted backwards to the price for cane. And if they had better access to the East African market, they'd be happy and outgrowers would be happy as well. But there is nothing that can be done as of now. And recently, retail prices have fallen sharply in Uganda, averaging to about 3,300 Ugandan shillings per kilo. So that is actually less than half the peak price of 7,000 Ugandan shillings a kilo that was 3 years ago. And the COVID-19 shutdowns in 2020-2021 hurt demand for sugar in Uganda, leading to many farmers abandoning sugarcane farming. But subsequent dry conditions in the region as markets opened up amid disruptions to international shipping saw a spike in demand, sending retail prices sky high. So prices rebounded strongly, creating a new normal that encouraged more people to plant cane. Now, some millers are predicting a further price decline. So we see cane prices falling even more as the crop planted over the past 2 years reaches maturity, and that was according to Albert Bitura, the general manager of Bwendero Sugar, a small miller based in western Uganda, in the district of Hoima. So he stated that they're very dependent on the Kenyan market, which is now flooded with their domestically produced sugar because of good rains over the past 18 months, and the regional market has seized up as a result. So Uganda's 16 sugar factories have an installed capacity of about 1.2 million tons per annum, but are actually operating at only half that capacity because of constrained access to export markets. So domestic consumption is only 0.4 million metric tons. Kenya is a single largest regional market, with Ugandan exports picking up to 100,000 tons at one time. So Mr. Mubiru actually mentioned that although Uganda has the capacity to supply anywhere between 120,000 and 150,000 tons of sugar to Kenya annually, frequent policy reversals have hampered market access. And we have seen reports from Kenya having blocked Ugandan milk from their market, and there's fears that sugar could be next. So if it happens, cane growers should embrace for us, because the millers have sugar in stock and cannot mill more than they can sell. So demand for cane will remain depressed, and the outgrowers cite high production costs for their insistence on better prices of cane. And one farmer in Buikwe said harvesting, loading and transportation are the highest costs, cost heads. So millers have been considering a mechanization of harvesting and loading, but this has run into resistance accompanied by threats of arson, and the industry has backpedaled, leaving an unequal status quo in which growers are the most vulnerable. So loading might look simple, but it is a highly specialized skill which very few loaders able to optimize between volume and weight of the vehicle's carrying capacity, and they are monopolists. So very rough and always on edge is the current situation this farmer described, and you can't bargain with them, so they actually just have to take their price and see what happens next. So hopefully this situation will be will be dealt with, and we shall have more insights by the end of today on how it is going to go down. But as that is happening, we're looking at Tanzania amending sugar laws to steady market, and this is actually targeting to stabilize sugar supply and control prices. And Tanzania has imposed regulations on sugar production, importation and distribution within its borders. So Parliament has passed a bill containing amendments to the Sugar Industry Act that gave the National Food Reserve Agency exclusive mandate to import, store and distribute sugar for domestic consumption. Their Finance Minister, Mwigulu Nchemba, said that the newly amended Sugar Act would help to control arbitrary shortages and hoarding of the commodity and inflating of prices. So according to Mr. Nchemba, this amendment will monitor price stabilization, and it is the government's responsibility to intervene during market failures. So the newly amended Sugar Act gives the Sugar Board of Tanzania discretion in issuing import licenses, and the SBT will not issue licenses unless it is satisfied that the local production is below the required level. So the new amendments require local sugar producers to declare their production costs, then submit any relevant information that may be required by the SBT at the beginning of every production season. And domestic manufacturers are also required to declare and publish in a widely circulated Tanzanian newspaper the names of their distributors in every region at the beginning of every production season. So the Act now directs issuance of provisional licenses and registration of sugar manufacturers, small case sugar plant operators and industrial consumers through the SBT. So the Tanzania Sugar Producers Association said in a statement today that, in a statement on Monday, that it is expected to raise production to about 663,000 tons by 2026 to cater for the local demand. And their chairman, Ami Mpungwe, said that sugar production had decreased from 144,000 tons in 2017 to 30,000 in 2023, causing acute shortages of the commodity. So he mentioned that the 7 sugar factories were issued with permits to import sugar in 2023 to fill the supply gap and push reduction of retail prices. So the government has been spending about 150 million US dollars to import sugar from other countries to fill the deficit. So shortages have pushed retail prices from 2,800 Tanzanian shillings to about 4,000 Tanzanian shillings per kilo in shops across the country. So Legal and Human Rights Center Director for Advocacy and Reforms, Fulgens Masawe, asked the government to attract more competitive sugar producers to increase production of sugar. He said that the government should come up with better policies for land acquisition and ownership friendly immigration laws for investors with friendly and prompt registration and provision of business permits within a day for foreign investors. Now, this is supposed to allow the importation of sugar to have a significant impact on the balance of trade and use of forex. So the government should promote domestic production and investment in sugar production. And hopefully the prices of sugar within Tanzania will be down by a whole $1 by the end of the year. But that is what is going on within the East African news as per now. Let's not forget that a lot is already going down, and we should keep an open eye within the East African financial news to understand how these markets are behaving and how the equities are responding to these particular market conditions. But globally, we're looking at polls seeking safety in gold investments during the double times across the eastern borders. We already had a hint of that very story last week, and we saw how many of these citizens are actually resorting to keeping raw gold in terms of maintaining their wealth especially within these turbulent times of war within across the eastern borders. Many of them have found themselves spending money on buying actual gold to store it as they cross borders to seek refuge and start new lives. And this gold has actually helped them to actually start their lives all over again, get a place to stay and be able to continue to provide for their families. But as looking into more global news, we're looking at the S&P futures standing at 5,615.25, and that is a decline of about 6.25, which is 0.11%. We're also looking at the Dow futures at 39,659, and that is a decline of about 36, which is a 0.09%. Nasdaq futures also went down by 24.25, which is a 0.12% decline. Russell's 2000 futures also went down by 0.50, and that is a 0.02% decline. We're also looking at Boeing to plead guilty to fraud for violating deal of 737 MAX crashes. We're looking at hedge funds reshaping Tokyo's exclusive club of government bond traders. We're seeing France dodging the far right win, but Macron and actually we're looking at one to govern within that very season. We're looking at the legend who picked Nvidia before Jump reveals his new prediction, and we're looking at Samsung's union steps union steps in terms of pressure over the pay with the 3-day strike. Stocks also slip with euro on French fiscal concerns, and we're looking at Beryl once again, a hurricane that is within a hurricane that as it bears down on the Texas coast. We're seeing how companies and the financial environment is responding to that as well. But looking into the story of the hedge funds particularly, we want to understand how these hedge funds are performing within Tokyo and how they're affecting their financial markets. But when Hiroyuki Kubota's bot party for the Japanese government bond traders and strategists restarted last autumn after a pause of several years, there was a reason to celebrate. And the veteran group was suddenly back in vogue, and the world's top hedge funds had begun to focus on the Bank of Japan's reversal of its ultra-loose monetary policy, shaking up the once sleepy backwater of global finance by hiring a steady flow of traders with knowledge of Japan's sovereign debt. So volatility in Japan's $7.1 trillion government bond market was surging to levels not seen since the 2008 financial crisis. So gossiping over sake and tempora, the party of mostly Japanese-speaking men in their 50s and 60s was so engrossed in conversation that few ventured on deck to observe the Tokyo skyline, said Kubota, a former JGP dealer who began the quasi-annual event in 1998 with members of his online chat room for government bond traders. So the atmosphere was buzzing just like 20 years ago, and that's exactly what happened as of today morning. So for decades, trading communities like Kubota's, which collectively refer to themselves as JGP Village, have looked inwards, and not many of those who participate in the sales and trading of government bonds. Estimates of the overall number range from a few dozen to a few hundred speak fluent English or have had a reason to broaden their interactions beyond Japan, where all the largest investors were based. So that's made the world's third biggest government debt, the world's third biggest government debt market, near impenetrable to outsiders. So it is a closed community, but people are not trying to be exclusive, said Shinichiro Ari, who is the chief investment officer at Amundi Asset Management SAS Japan unit. And he started his career as a fixed income portfolio manager in the 1990s. And it is, we're looking at this marking contrast to more than 20 trillion US dollars on the US Treasury market with its international investor base. And he doesn't think global markets would have a community that is similar to the JGP Village. And we're looking at it being a group that is now in high demand as new entrants live in the market. And in March, global investors actually shared of Japan's bond futures trading rose to about 79%. And we're looking at their previous performance, it is actually the highest ever, compared with just under 30% 2 decades ago. So last year, yen rates swaps cleared through Japan Securities Clearing Corp, and they surged to a record. So after keeping short-term rates anchored near zero for 2 decades, the Bank of Japan is widely expected to raise rates for a second time later this year, setting off a further boom in trading. And later this week, the central bank is set up to speak with market participants about its plans to reduce its huge bond buying. So the knowledge of JGP villagers is important to keep government debt sales ticking along smoothly, and there is a premium for those who know how to make money from rising rates. So more than a dozen participants have already been recruited from banks in a hiring spree stretching back to the beginning of last year, and billionaire Michael Platt's Blue Crest Capital Management and the UK-based Capula Investment Management have been among the most aggressive hirers. Bloomberg previously reported about this move of the massive hiring, and we're looking at Singapore hedge fund Demon Asia Capital having also picked up multiple recruits. So government bond issuance began to balloon in 1980s and quickly turning into a roaring trade. We're looking at Nomura Holdings, the business becoming a major profit center for Japan's top brokerage, and this was allowing employees who worked on bonds to get promoted to better positions, according to a former executive who asked not to be named, discussing internal business. So over the time, the bond traders began to be collectively referred to as Mura or Village. But that has been our analysis for today within the world of financial markets. We're here to see a lot more going on within that particular space as today's trading sessions go on within the East African financial markets and globally. But we will be here to give you more detailed analysis on the performance of these indices, on the futures, on bonds, on all kinds of financial instruments that you might be interested in, such that you may make worthy and knowledgeable market moves as you make your investments. But I have been your host, Victor Chiberu, and we shall meet in our next Markets Watch session.
Smart 24, driving business. Smart 24, driving business.
Hi and welcome to the Trading Bell. Finance, bill and the likes and all those things that have come up. Tax has brought all this conversation, and I sought to seek advice from the tax experts, and one of them in the country who I believe is distinguished by himself is Dr. Njoroge Obadia, who is an author of several tax books, including the one that I'm having here, Indirect Taxation in Kenya. And I just want to seek his mind on what's really in the tax sphere that has even instigated these conversations and what we need to know and much more. Dr. Njoroge, welcome to the show.
Thank you. Thank you.
You know, first of all, thank you for allowing us to come to the home and really have this discussion. And knowing very well, even today, we have demonstrations that are actually tax instigated, if I may say that. We're talking about the Finance Bill 2024. That's where the conversation started. And it seems like Kenyans have got into a place where they really understand this. But I wanted to hear from your end, through history, because you have seen it all. What are some of the good, the bad, and the ugly, when we use that, in regard to taxation in Kenya? And what are Kenyans really trying to say?
In my view, I'll start with the good.
Yes.
Of course, the taxes provide the liquid funds for running the country, which is a good thing.
Yeah.
But I think I see more of bad than the good. One of them is that the Kenyans, the common person, has no information about taxation, and those who have it, very little of it.
Yeah.
Then there is very little education on taxation. A lot of, there's no education, no books, no literature on taxation.
Yeah.
Actually, before I wrote my first book in 2019, there was no textbook on taxation in this country for a long time, because the previous authors, who are mainly either legal practitioners or tax consultants or lecturers from the University of Nairobi mainly, had not written for over 20 years.
Yeah.
So there's very little information, and even for the education which is taught either in the colleges, very little of it gets to many people. So there's very little education on that. So I would think that awareness on taxation is not there.
Yeah.
The way the taxes are spent by the government, nobody is aware. There's very little information on the expenditure.
Yeah.
More painfully, and I interact very regularly with the KRA officials.
Yeah.
They ask SPI to correct, but they have no accountability on it. So they'll be very bitter, and the people will feel very bad when they have so much to correct, but they have no control of it.
That's true.
And even more painfully, when they see it being wasted on offices which are not constitutional, which are not there and all that. The other ugly part of it is not having this education. And Kenyans grow to levels where they produce income. And at old age or at adulthood, they are recruited to tax paying. Is a new thing. They don't grow with it.
That's true.
And I think at the end of this discussion, I will indicate that tax education, right from youth stages in the curriculum, would be very important as an anchor to make sure that the Kenyans grow with the knowledge that they have a duty in their future age to pay taxes and be honest to it.
That's true.
I would also say that the level of integrity when it comes to taxes is castigated by the culture of the country, I think, is wanting, in my view.
Yeah.
Yes.
Wow. Thank you so much for that preamble. And it's true, there's a myriad of things to look at.
Yes.
One of the things that has been in the constant conversations from the KRA side, from the government side, they keep saying we need to enlarge the tax base.
Yes.
And it looks like they haven't cracked this out, trying to get the informal sector in and all those kind of things. I don't know what's your view in really advising. How do we crack this so that everybody is inclusive? Because they will say this, we were trying to bring as many people to pay taxes, and then there's an uproar and all that, but eventually we need everybody to pay. I don't know, what are your opinions on this?
Before I answer your question, I'd like to say that for those who have been honestly paying the taxes,
yes,
they have been hit much more.
Yeah.
And the tax authorities appear to go to those who are honest.
The same people.
The same people. So now to go to your question, I would like to say, there's a lot of data and information that can be used for that.
Yeah.
There is the recruitment of taxpayers.
Yeah.
Those who are newly coming to business, those who are newly coming to employment. There are those who are starting business either from foreign countries, or other areas. There are new businesses which are open every time. There is a tax net that is bigger and bigger. There are areas like, for example, mining, oil, which are not well researched and not well taxed. So I think the tax authorities go to the low-laying fruits, which they can easily catch, and because they are result-oriented. They want to achieve their results closer and easier from the low laying than those which they have to actually to work harder to get them paying. So I think that the tax authorities and the whole of the Ministry of Finance has to work harder to look at the areas which are resourceful. And there are very many, I'll tell you. I've been in taxes for over 40 years. And I'll tell you, there is very little that has been collected. If tax is actually collected and collected genuinely, and the payers being told an explanation and data being provided, they will pay. I'll give you an example when President Kibaki came to power.
Yes.
I am aware of even Kenyans living in foreign countries who say they will actually pay taxes even from foreign countries, and they pay to the Kenya government. He gave an amnesty, and which overwhelmingly scored beyond expectation. It's because they knew, it's like they were holding funds during the President Moi's regime.
Yes.
And they knew that there was a complete change. And this is an economist who had proved his work when he was either the vice president or the minister for finance. And they knew that the time has come. And you tell me, in the Kenyan growth of economy, the 10 years that President Kibaki was president, I think he's the one that achieved the highest growth in the economy.
Absolutely.
So what I'm saying is, if there is accountability, if the payer knows that the funds are going to a good treasury, and will be used for good cause, they are ready to pay. I'll tell you, and I've talked to many, and even today people are still saying, no, I don't want to pay because I know with that office of the who and the other one they are all a waste. So why do I have to pay money or taxes which are going to be wasted?
That's true.
Yes. So accountability in any government. And I think even the first world, that is what the scoring point is, that we got so much, we spend so much, but we spend for a good cause. Yes. And there is public participation. In fact, that's another very important arm of making sure that the finances are well spent, and not sneaking budgets which are not vetted.
That's
and
true.
which should not actually be there. So when it's all well done, this country, I'm sure, is a shining country, and it has resources, and it can grow to big heights using taxpayers' money. I'm sure they can actually develop with very little from foreign sources.
Wow.
Yes, I'm telling you, I have been in the taxation, I have had comments from people, and I'm telling you, if only honest people, honest, and really honest is the true meaning. Not pretending. We don't believe people pretend. But if you have people who are honest in their lives, And we can pick some in this country. We can so and so and so and so.
Yeah.
He read this department, and the way he lived, not change just because one day he became the CEO, and the life changed for the family and for the region and for himself.
Yeah.
No, they remained honest, loyal.
Yeah.
You'd see how they produce the reports, and actually even the department would bring results beyond even expectation because of the genuine and sincere performance.
Okay. So, Dr. Ari, there are two things I hear from you. Number one, you're saying if the citizens are motivated and can see where the taxes are going with clear accountability, we have enough to collect. That's what you're saying. That's
I'm
number
confirming
one.
that,
Yes.
and I'm saying I've been in taxation for many years.
Yes.
And people will tell you I'm not going to pay taxes because I know it's going to go. And I've told you when they said we must pay, and that is the 10 years of the Kibaki regime.
Wow.
Yes.
The second thing you've said as well is that there's something called trust currency. We must be able to as well trust the people that are using the money.
Yes.
Wow.
I'll tell you,
Yes.
the Gen Zs have said that they would like their chairman as the former CJ.
Yeah. They've actually asked for that. That's
yeah,
true.
they have for that.
Yes.
So what does that mean?
He was trusted.
He's trusted.
Yes.
I don't want to mention those who have not been mentioned.
Yeah.
That's mentioned by the Gen Zs. And many others we know that they have performed.
Yeah.
Yes.
Well, and they have a voice. Let's move on this conversation. You have written a book, Indirect Taxation in Kenya, and I have a copy here. And there's also definitely a direct taxation. And I just wanted you to help the viewers in very brief terms to understand between the terms, the direct taxation and indirect taxation, please.
Okay.
Yeah.
Direct. Okay. Allow me still to go back a bit. And
go ahead. Yes.
When I started writing my tax books.
Yes.
And this is that one.
Yeah.
And the fourth one is a Tanzanian version.
Yeah.
I sat on my drawing table and said, I want to write taxes, books for taxation in Kenya.
Okay.
And I wrote the whole text on what I want to write down. And I found that it is a mouthful. And they will not all go to one book. So what did I say? I say I must profile, I must prioritize, and I say direct taxes is what I start with.
Okay.
Direct taxes are those taxes which affect you directly. When you go write a check and pay to KRA,
yes,
that's a direct tax.
Direct one.
When the taxes are deducted from your payee and pay, that's direct.
Yeah.
It affects you directly.
Yeah.
They get it right from you. The opposite of that, if I may call it so, is taxes which are not actually paid direct by yourself, but they are paid through an agent of the government, appointed through an act of parliament. You're talking, for example, you're talking about VAT.
Ah, yes.
You have never written a check for VAT.
Yeah.
Unless you are a registered taxpayer.
Yeah.
So the difference between direct taxes is that direct taxes are taxes which a taxpayer pays directly to KRA or to the government or to the exchequer. Indirect taxes are taxes which are payable but not directly, but are paid through an agent who are appointed.
Okay.
And I've talked about VAT. When you go to a supermarket and pay an item which has VAT, you get a receipt.
Yeah.
You have already paid your bill, but the part of the components of that is VAT.
VAT, yes.
You are a taxpayer, but not direct. That supermarket is going to account for that tax to the KRA.
Yeah.
So that's the difference.
Okay.
When you talk about the film, when you go to a theater for a play, for movie, you buy your ticket.
That's true.
You only know that maybe it is 1,000, 2,000, or whatever amount it is.
Yeah.
But the component is broken down, and there's an element of taxes in it,
of VAT.
and many others.
Okay.
That happens like that.
Okay.
Yes.
So these are, in brief, what you're saying is that these indirect taxes are through the supply chain sometimes.
Yes.
Like when they say, when they had mentioned there was something to do with bread, VAT on it, it would have just been, I go to the shop, just buy, but in it, there was VAT.
Yes, it is part of the total cost.
Okay.
Yes.
Just trying to understand VAT for just for the sake of people who I know right now it's already on their mouths, but just for the people who maybe really want to differentiate these two things. How does VAT system in Kenya work, and what is the key features and challenges in brief?
To start with, one has to qualify
Yeah.
To be registered as a taxpayer.
That's true. And
the cutting point is a turnover of 5 million in 1 year, which is an average of 466,000 in a month.
Okay.
In terms of sales.
Okay.
That's number one. They are also what they call the high value or designated goods or services. If you are dealing in gold,
yeah,
or gold items,
yes.
You see, by virtue of you being a gold dealer,
yeah,
it talks a lot.
Yeah, that's true.
Services like accountancy, audits, and all that. Being an advocate is also not something that you underrate, and the chances of that person either having other income is also very high.
Yeah.
So there is a qualifying cut-off level in terms of turnover, particularly for business people. So when you are registered as a trader or registered for VAT, you are supposed to raise invoices for the sales what a registered person does, and add 16%. The 16% is called output tax.
Okay.
Now, you are supposed to do a return by 20th of the following month, each month, when you have done a business.
Yeah.
From the output tax which you have charged, which is 16%, one is supposed to deduct what is called input tax. Input tax is a VAT on purchases which you buy for your business.
Yeah.
So the invoices which you raise and charge 16%, that 16% is called output tax, which you raise and give to your customers. There is what you buy from outsiders for your consumption as a business. The VAT which you pay in those invoices to those who sell to a registered person is called input tax.
Yeah.
The difference between output tax and input tax is what is payable to the government.
Okay.
So that is the check that you draw at the end of, by 20th of the subsequent month or earlier, between the 1st and the 20th, and pay to the government.
Okay.
If you don't pay or if you don't give a return by 20th, you are penalized 10,000. If you don't pay that VAT by 20th, there is a late payment tax.
Yeah.
The input tax which you knock off, which you allow, is subject to a certain legal notice which must be observed.
Okay.
You cannot deduct input tax on spare parts unless you are a car dealer, spare parts seller, or items on hotel, unless you are doing hospitality or hotel restaurant services, or furniture, because they are not directly. Also, personal items and input tax on personal items are not allowable.
Okay.
So if you make a point, if you happen to allow that input tax, what will happen is that it will be knocked off. It will be reversed.
Yeah.
For example, if your output tax was 20,000 and you allowed 5,000 on input tax, and out of the 5,000 input tax, 2,000 was from not allowable, they will reverse the 2,000 and ban from it. They'll check what you have allowed.
Okay.
They'll knock off 2 and demand it directly and say it was disallowed.
Okay. Let me ask you, Dr.
Then I also important to say that, for example, for newly registered taxpayers, you can go back 6 months and claim input tax. Because you may have been in business for the last 6 months, you can pick invoices for the last 6 months which you bought items. Maybe you are setting out an office. You are allowed by the law to go 6 months accumulate and allow in the first month.
Yeah.
If what you have already billed for the is less than what you have carried forward, the credit is taken forward.
Okay.
And you don't have to pay. You can carry it forward until it's exhaustive.
Okay.
I think maybe that's
quite helpful.
Yes.
And you've just mentioned that part, and I thought we talk about sometimes encouraging businesses to start.
Yes.
But in Kenya, we seem to tax just at the birth of a business. We immediately don't give them a breathing space.
Yeah.
And I hear in other countries they allow people 1, 2 years sometimes to just grow. I don't know what's your comment on that. But number two, as well as you comment on that, VAT is at 16%. You are a tax expert and you've seen other countries and the percentages they charge. Where are we? Are we too high? Are we too low? Can it ever go low? I wanted you to touch on those two things, on encouraging businesses to start and the VAT that we're paying at 16%.
I would like to say that the taxes, the rate is moderate.
It's moderate, okay.
Yes, it's moderate because we have even our neighbors who have higher rates. Yes, so, and I think there have always been some intention to boost it to the 18% or other rates like Tanzania and Uganda has.
That would be another mandamano. But anyway.
Yes, certainly it would be. Do not be taken lightly.
Yes.
I would also like to say that VAT is not a tax that is charged on an enterprise.
Okay.
Compare the impact and implication of income tax and VAT. Income tax, you get it from somebody else, you carry it to yourself and forward.
Yes.
Income tax is based on the performance.
Yeah.
So I'm answering your question as to the encouragement of.
Yes.
If you look at some export promotion areas or zones in this country.
Yeah.
There are those who are either exempt or who they are given a grace period of 5 years for encouragement to get ground. So one thing I would like to say is in this country that one is completely absent.
Yeah.
And actually the tax person does not even care whether you know whether there are taxes or not.
Okay.
They will just come to you after the year's gone and demand taxes.
Yeah.
So the issue of encouragement in taxation is completely out. The care, the PR and the care that we need to take to a customer, because I think from the KRA perspective, a taxpayer is a customer.
Yes.
But they hit them with the big crab, with the big rungu, which is not right.
Yeah.
They always want to hit them. They actually don't tell them, you are coming to a zone of tax paying, and these are the rules and regulations. The rule and regulation number one is this, and that by the end of the year we shall do this. Actually, many learn about taxes where they are already in it and where they have already defaulted.
Yeah.
When they are already defaulted, and that's very painful by itself. Because if you had a carrying entity that tells you, this is the way to go, and keep your books, your cash book, go for a software that cares for your entries and all that, and these are the taxes to pay, these are various taxes, this is installment tax, this VAT, this pay as you want, this withholding tax, all the types of taxes that go along with the businesses. They are enlightened. But when after 12 months of trading, you tell them that there's somebody called an auditor, there's somebody who was called KRA.
Yes.
And they already failed for 12 months. The bad that is already done, and the tax sins already committed.
Yeah.
But that person try to getting out of it, they get to a lot of mess. Because you see, also the integrity of the persons who handle the taxes, particularly in the field of taxation.
Yeah.
I'm not saying that everybody is bad. But for somebody who is already deep in trouble, might get into even more trouble because they would be trying to get it in the easiest way, and some of the easiest ways are not the best ways. So I think the element of taking care of taxpayers when they get into business, I think it will be very important.
Okay.
Yes.
And I think at some point one of my questions was about excess duty, but I just wanted you in brief to also explain, because we've talked about VAT, excess duty, and I've seen it's charged in some of the luxury goods, but would you just care to quickly explain about excess duty?
Excess duty is charged on manufactured goods and imported goods, and some imported goods. It is also these days charged even in banking services. Its main purpose is to discourage consumption. And those days when we would hear the budget, and it's very important, you would say, I'm increasing this to discourage this. I'm increasing this to discourage this. I'm increasing excess duty on imported clothes, on mtumba, so as to encourage the growth of the local industry. Local industry. So it encourages or discourages depending on the intention of the ministry or the government.
Okay, that makes a lot of sense. But we have seen some excess duty being sneaked in or being introduced that have made people uncomfortable in some areas that shouldn't be, right? True. And I think that's part of even I think currently there's something on petroleum that's going around. You may know, you may have seen it or seen it, but the participation, you see, it is just sneaked, and I think the word sneaking is very bad by whichever standard, because it shows that the person doing it is not transparent, or is not honest. Is dishonest to the consumers. Yes, just want them to pay without them knowing that they are paying, which is not right. Okay.
Yes.
Let's move on to compliance and the challenges we're seeing, because some people may say, yes, we are doing our best to educate Kenyans on it so they can do this, but there's still a compliance and challenges, especially in the SME sector. What would be your word on that, especially to enhance compliance?
My word on that is a lot of help from KRA and the Treasury and the government. I'll say there's a lot of potential. If they do research, they can get a lot of that. But one, being transparent. Two, being understanding. Three, being educative. And then also being helpful in terms of support, education, and even when it comes to paying taxes, they accept payment proposals and not demanding immediate taxes. And also not closing or freezing bank accounts. We've known companies which have gone under because they are either frozen or they cannot actually, they need a lot of support actually to wake up.
That's true.
But the general approach of the current tax regime is they want their penny. The last drop of the blood, they don't care as long as they get it and they're able to get their target.
Okay. As we come to a close, there's this whole terminology on customs duty, and I want to bring in the fact that we are a membership of the East African Community Bloc. In fact, even right now, there's conversations about edible oils. Yes, we have dropped the Finance Bill 2024, but there's still a conversation that East Africa, as a member, has already agreed to some, common market taxes that we are seeing there. I just wanted you to help me understand what are some of these influences in the customs duty framework that we are maybe about to see, and how do they override our own here, or how do they relate?
There is a East African Community Protocol. It's an agreement between the East African countries. The Kenyan country appear to have a lion voice in it, is well heard, and it being a bigger brother within it, it is well respected. However, it being a kind of an economic hub, so to call it, it is also taken with a bit of its influence, its economic influence, that it will bring too much. And actually sometimes it is given limits which it can bring in, and the changes it can bring within the items which it brings to the market. The changes like the edible oil, which it being a big supplier, and it being a manufacturer, it negatively influences the other smaller countries which have no say, and it being a bigger brother, and with a lot of it coming from the Kenyan country, it has that influence of bringing too much bringing enough or even changing the prices.
Okay.
Yes.
Okay.